Hi traders, this is TradeAlerter from ForexSignals.com on Tuesday, 2nd of September. Listen, today we've had some quite large moves in Asian session. Now, usually you don't get large moves in Asia, and it was led by the dollar yen. Now, dollar yen at the start of the Asian session, it broke above 104.50. You can see this sharp spike here. And what happened here was that stops were taken above that level, and also a lot of options that were in the market had to cover. And so this led to a follow-through US dollar buying, not just on dollar yen, but also on the pound and also on the euro dollar. Okay. Now, the euro dollar has been threatening to test 131 for the last few days. We haven't tested it just yet, but we did have the dollar yen test 105 a couple of minutes ago, and it did test it and has come back down a little. Which is normal when you're testing a big level and the market's already overextended for one day. Alright, but we'll be looking at that level. Now, if it gets above 105, 105.60 is the highs of the previous rally. If the market is long going into the NFP, it makes it a lot more dangerous because the market's expecting good news. Yeah, so if it comes in worse, then you could have a 100 to 150 point drop. If it comes in better, then the extensions above may be capped at say 106. All right, so keep that in mind. The further the US dollar strengthens into the big announcement, the more likely there is going to be a dramatic reaction on the downside if numbers don't come in as strong. And look, it's not expected to be weak. They expected another 200,000 number, and also the unemployment rate to drop down to 6.1. So that will be closely watched, but before that we do have the ECB. Okay, so ECB is going to be not so much we expected them to do anything, but Draghi, if he hints at QE being closer than currently priced in, then you could see that euro testing 130. And he's pretty aware of what he's saying, so if he wants the market to go down, then you're going to see that reaction. Alright, so going through what we're trading today, so far, if you are following me, you will notice that we sold some Euro Swiss after the market rallied towards 120.80. Now it tested 120.80 four times, and failed each time. And those sort of candles there are indicative that the sellers are in control. Yeah. So luckily we did hedge there because we have seen a fairly sharp, well in this pair anyway, drop in the last couple of minutes. Just before going on there, and where we said our take profits is back down was towards the previous lows of 120.50. The other pair that we're looking at is the pound. Yesterday we sold up at 166.20. Now, if we just see that if we had full knowledge of what was going to happen here, basically we had some news out a couple of hours ago that the Scottish referendum vote is actually getting closer. Now, it started out being 60% were going to vote no and only 40% yes, but now it's getting towards the numbers are coming in around about 48 to 52. Okay, so it's a very small margin that the no vote is winning by, and they say that if they do vote for independent Scotland, we could see 200, 300, 400 point drop in the pound because of the uncertainty about what that will mean for UK debt and Scottish debt, and also if it's going to cause snap elections in the UK Parliament, which is very likely if this happens. Now, the vote's in a couple of weeks, so it's going to be a big part of the market's daily updates and such. If it does fade away, you're going to see the pound start to do better. So it's probably got 100 to 150 points worth of selling on the pound because of the uncertainty. And it's one of the reasons why the pound's been so under pressure in the last few weeks. But that being said, the euro is also under pressure, and a favorite way of playing the euro negative is with those euro pound shorts, which is exactly the same as a pound Swiss long. All right, so the market came down to that level we're talking about yesterday in my market update. We're talking about buying at 152.20. The market dropped there today, so we've got long. It's in a small amount of profit at the moment. This pair can rally either the Euro Swiss rallies, okay, or the Euro pound goes down. And so either of those two options are possible. Probably not the Euro Swiss rallying, although it has done well today. Most likely from more negative news out of Ukraine or more negative news out of Europe somewhere there that will allow the euro pound to continue to on its downtrend. On those levels where we're looking at in the euro pound, it is getting pretty close to some of the big levels that the market will be watching. So previously, it has rallied today obviously. Previously we were looking at 79 level where it was testing a few times, but below that, the lows before that was around about 78 to 75. Okay, now if we were to break that low, then we could actually start talking about 78, and this would put the pound Swiss back towards around 155. So that's the trade that we're looking at there. In terms of the other trade that's happening at the moment, it's a Euro Kiwi short. Now the Euro Kiwis had a large short covering rally, which is going to happen from time to time. Basically, the Kiwi is playing catch up with a few of the other pairs in terms of US dollar strength. All right, and the euro is finding support at 131, and so you're seeing that the Kiwi is falling, but the euro is not falling as fast as it was. So the market's shot back up around about 100 points so far, and we've sold into this rally a little early. Got in just above the 157 level. It's around about 157.15 level, and it's around about 157.40 now. But it is topping out at the moment, and over the medium term, it's very hard to see that pair rallying. So, it's one which you're going to get paid positive swap each day, which is going to help, and it's got the trend in your favor, and it's also got the fundamentals in your favor. Okay, so it's not a pair that I worry about. If the market does rally another leg, probably look to sell the second position. You can see that the first position I put on was half size. Now, in terms of data coming up, we do have some big data out of the US, and it's the first week back. It's the first day back of the trading week because they did have the holiday yesterday. So what we're going to be looking at is the US ICM, and it is the manufacturing. Now we've seen the data out lately from around the world being a little bit weaker than previous. Now it could come across because the data has been weaker around the world, especially the PMI data, which is the confidence of the businesses. You could start to see that come across to the US. If that does happen, expect to see a little bit of US dollar weakness, and that will probably be best displayed across on the dollar yen. And just also be careful about the US stocks here. Now, this is the chart here of the daily. What we'll be looking at is that this is a very large rally by any measure. So overbought, and look, it's on its last legs here in terms of it requires news that is not too strong, okay, to start bringing forward the U.S. interest rate rises, but not too weak as to make it turn into or spark some profit taking. All right, so it's above 2,000. This is the S&P we're looking at here, and we'll be looking to see if there's any sort of exhaustion coming through in the next couple of days, and this will play out a little bit more dangerous for some of these pairs like the Aussie dollar or the Kiwi, because usually, one of the reasons why they haven't fallen as far as the pound or the euro is that stocks have been doing so well. Right, so let's keep an eye out that. That's coming out in around about 2.5 hours, and you're going to see immediate reaction here. It is closely watched, and it will have an effect. All right, traders, good luck today. If you need anything, you want to ask some questions, come through to forexsignals.com into the trading room. You'll see me there. My name is TradeAlerter. We'll talk tomorrow.